These stocks are primed to deliver stellar growth on a sustained basis. These are the new growth stocks to buy before they grab the limelight and surge higher. Lore Holdings. The company is positioned for organic and inorganic growth. Ibotta. An addressable U.S. market of $200 billion enhances the likelihood of international expansion. PayCS Group. The firm provides of skilled nursing and assisted living facilities with a significant cost advantage. Let's dive in. IPO rockets. Here are the 3 new growth stocks to buy for 10-bagger returns by 2030. Welcome to Timely Investment Research. If investors can spot high-quality new growth stocks early, the investment has the potential to deliver multi-bagger returns. While blue-chip stocks are a fortress for the portfolio, growth stocks offer millionaire-maker potential. Importantly, when a story is in the limelight, valuations might already be stretched. Therefore, it's essential to dig deeper and find under-the-radar ideas that are undervalued. One source of selecting undiscovered growth stocks is the most recent initial public offering listings. And the IPO market for first quarter of 2024 has been robust. 46 IPOs have raised total proceeds of $8.9 billion. With dozens of new listings, some new growth stocks to buy and hold look promising. These growth stocks are likely to deliver 10-bagger returns by the end of the decade. I would like to think conservatively, and therefore, the stories discussed might surprise in terms of returns. The important thing is to hold with patience for the long term. Let's discuss the reasons to be bullish on these ideas. Number 1. Lore Holdings. Lore Holdings has been trending higher since listing. As compared to the IPO price, Lore Holdings stock has almost doubled. It's still a good time to buy with the aerospace and defense company having ample scope for growth in the coming years. For first quarter of 2024, Lore Holdings reported revenue growth of 23.7% to $91.8 million. Also, the company reported a healthy adjusted earnings before interest, taxes, depreciation, and amortization margin of 36%. Lore Holdings has provided a healthy sales guidance of $370 million for the year. Notably, the company has used $250 million of IPO proceeds to repay debt. With higher financial flexibility, Lore Holdings is positioned to fund future organic and inorganic growth. Therefore, growth acceleration seems likely, and this view is backed by positive tailwinds for the defense sector. Further, Lore Holdings expects increasing demand for products supplied to the commercial aftermarket. Hence, it's not surprising that Lore Holdings stock has remained in an uptrend. Number 2. Ibotta. Ibotta is another interesting IPO that promises to be a long-term value creator. As a matter of fact, Ibotta stock has already caught the attention of multiple Wall Street analysts. I expect a meaningful rally in the coming quarters. The company's offering, Ibotta Performance Network, allows consumer goods brands to deliver digital promotions to consumers. Ibotta's clients includes Walmart, Coca-Cola, and PepsiCo. These are just few names among the 850 clients. For 2023, Ibotta reported revenue growth of 52% on a year-over-year to $320 million. And the company reported a healthy earnings before interest, taxes, depreciation, and amortization margin of 26%. Ibotta has a potential addressable market worth $200 billion. This provides ample headroom for growth. Finally, Ibotta derives 100% of revenue from the U.S. It's likely that the company will expand its service offering to international markets. This is a possible catalyst for sustained growth. Number 3. PayCS Group. PayCS Group is a provider of skilled nursing and assisted living facilities in the U.S. from an IPO price of $21. The stock has trended higher by 43% to current levels of $30. However, valuations remain attractive at a forward price-earnings ratio of 20.5. I expect multi-bagger returns considering the business growth potential. For first quarter of 2024, PayCS Group reported healthy revenue growth of 31.9% on a year-over-year to $934.7 million. Further, the company has guided for full-year revenue of $3.7 billion with an adjusted earnings before interest, taxes, depreciation, and amortization of $356 million. Currently, PayCS Group has 218 facilities, including senior living, across 9 states. Thus, ample scope for entrance into new states abounds. This is likely to ensure that revenue growth remains robust. Finally, the company's skilled nursing facility, post-acute care, has a cost per day of $550. For a hospital, the cost per day is $2,914. Similarly, the inpatient rehabilitation facility has a cost per day of $1,850. Therefore, PACS Group has a clear differentiating affordability factor that makes it attractive. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.